Welcome back to the channel. Today on Street Finance, we are looking at the two major types of investment. The first type of investment we'll look at today is what we call the fixed income investment. And these are type of investment after it is done, you can go and sleep. And if you have not watched my video on interest rates, you understand it better if you watch that video before watching this one. When we talk of fixed income investment, on a paper, the very day you are doing this type of investment, you are able to know the reward you are gaining within the period in which you want to do this investment. Like I said earlier on, all investments are tied to interest rates. So for example, what are types of investment that are fixed? Now, the first one is what the bankers call fixed deposit. Fixed deposit simply means that you are investing some amount of money of yours with the bank, and within a period of time. Most of the times it's 3 months, 6 months, or a year. You talk of government bonds or treasury bills. That's how government actually borrow money from the citizens. Government bonds are a little bit, in terms of interest rates, are higher than the banks, because with the bank, what the bank does is that they take your money and then go and invest it with the government. These are the reasons why it is very important for you to keep watching this space, because a lot of knowledge will be shared here. Now, the second type of investment is what we call non-fixed income investment. And this is the investment that, in fact, you are not guaranteed rewards. What it simply means is that investment is all about taking risks. So this is a type of investment that can also make you a millionaire. However, it's also the same that can make you a very poor man. You understand? So you have to be careful when doing this type of investment. What are the types of non-fixed income investment? One, we talk of cryptocurrency. Cryptocurrency is one of the volatile, the riskiest type of non-fixed income investment. We talk of shares. If you buy shares of companies, it's also non-fixed income investment. Why? In finance, we'll say the market conditions decide whether you are gaining or losing. Inflation is also part. Inflation is not stable. It changes. So these changes affect your investment. Government policies. When a government can introduce a new policy and it can wipe out your investment, you understand? So with non-fixed income investment, you are not guaranteed reward. That is why in finance, we'll say that you should have a portfolio investment, have a little bit of the fixed income investment, and then have a little bit also of non-fixed income investment. It helps to keep you at par. So Charlie, if this video ever made some sense to you, don't hesitate to like. If this is the first time you chance on my video, do follow and subscribe to the channel. This helps the channel to grow. It doesn't cost you anything. Charlie, thanks for being part of this dream of mine. I love you all. Bye.